Good morning, everyone, and thank you very much for joining me. This is the DAX Open. My name is Russell Shaw, Senior Market Specialist at FXCM. My email address is r@fxcm.com, and today is Thursday. It's the 2nd of December, 2021. Just going to bring up our high-risk investment warning, and just want to remind everyone that we are going to be doing a live trade tomorrow with the NFP, live trade, live account. I'm just going to put the link inside the chat, so you can go ahead and register if you'd like to join. As a market commentaries disclaimer, I'll just keep this on screen for a few moments as well. And here is our references, MarketScope 2.0, CNBC.com. So let's go through the CNBC warning note together. Excuse me. And the headline: European markets head for lower open as Omicron COVID variant fears return. So here, European stocks expected to open lower today. Concerns over Omicron COVID. Major markets across Asia Pacific and the US had bounced back Wednesday despite fears about the new variant and the Federal Reserve mulling a quicker than planned taper, but global stocks appear to be struggling to regain momentum and continuing uncertainty about the risks posed by the new Omicron variant. This is a bit odd, just reading that, because markets were actually quite badly down. I think they're talking about the futures here overnight. So there has been a sort of a not a bounce, but let's just say support. So that, in other words, they've stopped moving lower. Let's carry on with this paragraph here. Global stocks appear to be struggling to gain momentum and continuing uncertainty around the risks posed by the new Omicron COVID variant, first spotted in South Africa last week and designated a variant of concern by the WHO. It's interesting they're still saying first spotted in South Africa. Perhaps I just get my back up about it as a South African, but as far as I understand, it was found in the Netherlands first, but maybe I'm just being difficult when I shouldn't be. The WHO said on Wednesday that at least 23 countries from 5 of 6 WHO regions have now reported cases of Omicron, and we expect that number to grow. It also noted that the hospitalizations are rising across South Africa. But said it's still early. It's still too early to know whether the Omicron variant is driving an increase in severe COVID-19 cases. Yeah, I did listen to a report about that. So the current testing doesn't. Depending on which tests you're having, but a lot of the testing doesn't pick up the variants. But because of the sharp increase, the theory is that it is the Omicron variant. So I did listen to that report. Just regards to the testing, I think that the limitation in the testing is picking up the sort of the type of protein reaction, something like that. Again, I admit my my lack of knowledge here, but there was something in the testing which they couldn't quite pick up which variant, but the theory is that it's Omicron. All right, Asia Pacific markets mixed Thursday, while US stock indexes inched higher overnight. The CDC confirmed that the first known case of Omicron variant is now diagnosed in the US. That really sent stocks tumbling. So there was actually a fair amount of support for the US indexes, and we actually did a scalp when they opened yesterday afternoon, and there was a fair amount of support. As soon as that CDC confirmation came in, it started a waterfall effect. Okay, so the first case of the heavily mutated variant was detected in Northern California. Data releases include the Eurozone unemployment rate for October and producer prices for the same month. there are no major earnings on Thursday. All right. Hello, KD. Good morning to you and welcome as always. And thank you to everyone who's joined. The DAX chart. So this is the weekly. This is what we examined yesterday. I think that the weekly chart very much remains the same as yesterday's analysis, in that we've got this underlying support. Okay, if I zoom in here, this candle here to me is a good looking candle, but it's an open candle. It doesn't, it only closes after today's trading session and after tomorrow's trading session. So we don't know where this candle close is going to be. There could still be a huge sell down and we could have a big red candle by close of trade tomorrow. But as it stands right now, it's not a bad looking candlestick relative to what's happened over the last week and a half, right? We had a huge, massive sell down and we found support. And I think that is a mark of resilience. So there's that support. And then the idea of this candle having a lower low than last week's candle, in my mind, has actually solved a huge conundrum. And that conundrum is how's price going to react with this massive ranged candle? And a long range candle is problematic in technical analysis because it's hard to actually see trend direction based on the price action if it's taking place within that range. The fact that we now have a candle that's got a lower high and a lower low has negated that problem to a large extent. So if we get a candle that kind of looks like this, we would have effectively our three conditions for a reference candle reversal, right? Which is much easier to see. Imagine we didn't have this. Imagine we didn't have this candle. So I'll just sort of cover it. And imagine we got this. Now, there's no swing low because this is actually an inside. Theoretically, this would have a lower high and a higher low. There'd be no directional bias. But because we've got this week's candle plotting as it has, it's sort of opened up the pathway for a potential swing. In other words, there's an obvious question here. Is this a buy the dip scenario? Now, I think that there is certainly a certain panic that's taking place because of Omicron. So, and that of course is a wild card because yesterday, to me, it looked like there was initial market support. The next thing, the market was getting sold down quite viciously. So the wild card there makes the uncertainty much higher. And what is uncertainty in financial markets? That is the definition of risk. Okay, so the uncertainty is magnified. That means the risk is magnified. And if that is the case, then you have to focus intently and intensely on your risk management. You must have stop losses, and you must have money management because that's the environment that we're currently operating in. Just some sort of scary headlines that I did read on CNBC. So one of these is Omicron will likely dominate and overwhelm the world in 3 to 6 months, doctor says. I don't know the ramifications of that. It's just an alarmist type of headline. And another one that I thought, which caught my mind was, if I'm just seeing if I can find it, I'm not sure. I think it was Goldman's, but one of the big banks said they're looking to buy the dip, but I'm just not sure which was the big bank. So just some headlines that did catch my mind. This, to me, is at key level of support. So the buy the dip opportunity stands for now, but you know, if this kind of moves like that, well, that would negate it. Take a look at the oscillators. The oscillators are not ideal for us. We want them to be in the 80 region and above. We want to see the RSI above 50. Neither of those has taken place, so there is still a bit of pressure out there. Just keep an eye on that. Let's go down to the daily, and I'm going to just bring up this chart here. So this is our triple moving average. It's not ideal, right? You can see that we've got this orange moving below the red. What does that mean? Well, in a upswing, so let's just take a look at this area here. In an upswing, green will move above orange, orange will move above red. That's a bullish formation. Well, we've got the opposite now. Now we've got green below orange, orange below red. So clearly all's not well. The issue with moving averages is that they're going to give us continual false signals in consolidation, but they're going to give us terrific signals in a trend. What does that mean? That means that if we are in a downtrend, which I'm of the opinion we're not, but if we are in a downtrend, well, then we've got the bearish formation, okay? And if we get angle and separation here, then we are going to be moving down. So I'd like to get this bearish stack sort of done and dusted. I want to get it back into neutrality, back into bullishness. Again, because the EMAs tend to lag, I think the more pertinent signal for us would be around the support. So just keep an eye on the support here. If I take a look at the Nasdaq, just as an aside, I'll come back to DAX in a moment. If you take a look at Nasdaq, Nasdaq is not quite as dire. You see that? So we've got the over here a green, orange, red up. Now we've gone not into a bearish formation, but a neutral formation, because we've got a faster green below the intermediate orange, but the intermediate orange is still on top of the red. So I hope I'm making the point clear. I'm not sure if I'm being articulate or not, but you can see the order here is orange, green, red, orange, green, red. If you go back to DAX, okay, that's not the order. The order is on the DAX, red, orange, green, red, orange, green, and that's the slight difference. So it's a little bit of a concern, which I want you know, to disappear as quickly as possible, and I'm hoping it does. Which of course now brings us to our next chart, which would be the zone analysis. Well, this just confirms the stack here, the bear stack, because we're in our area of weakness. I want to come back and talk about this in a moment, but just before I do that, let's just go down to the hourly, and this is kind of where our focus is going to be, I think, for most of the day. Let's just go back. If we're going to get out of bearish stack here, if we're going to have this level of support effectively as a platform for higher prices, well, we need to see the EMA turn bullish and move northeast. If that doesn't happen, and sorry, that's not what I intended to. If we get it moving in that sort of southeasterly, that's trouble. Okay, now we go through to our stochastic. So the stochastic is looking positive. But to really be a positive factor on the market, we have to get to 80 and hold that 80 level. If we go into 20 and hold the 20 level, then it's kind of watch out below, right? Here we kind of hit 20 and we maintained, and you can just see the technical damage that was done there. If we take a look at the Nasdaq, so there was a terrific sell-off in the Nasdaq yesterday. So go through to the Nasdaq. Oh, sorry, I picked up the wrong one there. Just go through to the Nasdaq. All right, you can see it hit the 20 and kind of held, and there was just terrible damage there. Now look where it is right now. If the stochastic can't get out of the 20, well then it's kind of look out below, right? So this is a very fragile area for stochastic to be in. If you take a look here, kind of holds, there's the technical damage. See, we want, assuming that you're looking to trade bullish, you want the stochastic to get into the 80 area and hold. If you're looking to short, then 20 and holdings where you'd like it to be. Let's just go through to the DAX, and I want to just end off with this chart here. In fact, it would be better for me to use just a vanilla chart here. Let me change this to a daily. All right, so just sort of a plain vanilla chart, no indicators. I just want to analyze what's going on here just before the start of the day. We've got about a minute before the cash open. So you've got this as a potential swing high. The active swing is this one over here. I think this is the, this is it, I think. So this is the kind of active swing, and it's taken us down. If we get a close above this level, that's perhaps sort of the support doing its work. You can see yesterday's candle is a extraordinary weak candle. So bulls pushing price all the way up until the high. What happens at the high? Bulls lose control, bears take over, and they savage the market to the downside, and we close right off the highs. Now, there is a real chance of damage here. If we close below yesterday's low, well, you know, that's kind of now, boom, the next swing, right? So then we jump into the next swing. So it's very fragile over here. Yesterday's price action is technically huge in kind of this this weakness. The question is now, do the bears follow on? As we start the day, there is a gap up. You can see that we close here, we open there, but there's certainly uncertainty. There's uncertainty. What I mean there's uncertainty? Well, at the moment, today's candle is completely within yesterday's range. It's what we call that inside day, right? It's what we call the inside day. So let me just bring it up again. This is inside yesterday's range. So the bulls haven't got the conviction to take price up past yesterday's high. The bears haven't gained the sort of the strength just yet to carry on sort of with their shorting of the market or selling down. So there's just at the moment an uncertain start to the day, and this is sort of very fragile. So we want to see, do we close below this the lower aqua? I want to take that out, or do we close above the upper aqua? And these are important questions. They're going to influence our analysis. So this is kind of, we've got this inside day that we're dealing with at the moment, but it's just to me a very tough market. If there is one sort of one consistency since Monday, because you know, there's been a lot of if we go there, if we go down here. But the one consistency is we're in a high risk market, and that's still the markets are always risky, but now just yesterday, perfect example. There was support, then the news came out about the California case sell-off. So it can just turn on a dime type of a situation. So just be very careful. Stop losses, money management must be carefully planned. All right, any questions, please go ahead and type those in. Any questions? I want to remind everyone that there is a live trade and live account tomorrow at the 10 minutes before the release of the non-farm payroll. So we'll be doing a live trade there. All right, no questions, so we'll conclude at this point. Hold on one second. Sorry, Katie, I only just saw your note now. Katie, just asking to go through oil and Nasdaq. So Nasdaq, I think we've gone through. I think with Nasdaq, Katie, it's really, if I could just go back to the hourly chart here. We ran a very, very difficult position on the short term. On the longer term charts, I would suggest we're in we're more neutral than anything. Okay, so it's not an outright bearish daily, but the hourly chart here is certainly sending very chilling signals at the moment. And if we take a look at oil, let's just bring up oil. So this is remarkably looks remarkably better than the Nasdaq chart, because you can see how oil is out of this kind of danger area. But truly, Katie, the idea here is all about getting the momentum going, right? How do we know the momentum? Must get to that 80 level and must hold that 80 level. It's no good hitting 80 and dropping out. If it hits 80, drops out, it's not going to build the swing. So it's not about holding 80. We want to see the angle and separation on these EMAs. The oil chart here also looking horrendous. And you can see the bearish stack here. With regards to oil, KD, there is an OPEC Plus meeting today. And I think Omicron now has really sort of, again, it's that wild card. Without Omicron, I would have said that I expect OPEC to maintain the current schedule of production. So they've got sort of timelines of when they will sort of alter their supply. The fact that Omicron's come in now, or maybe that gets changed and there is some sort of, I guess, thought to perhaps just managing the potential damage, economic damage of Omicron. So again, oil today, I think, is going to be a very difficult trade, specifically because of the OPEC Plus meeting. Does that help, Katie? Okay, cool. All right, guys, let's wrap up here, and please email me and register for tomorrow's live trade if you'd like to join. Thanks very much, guys.